Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So let's take a look. Trying to avert disaster, we want to know where we've been and where we've recently gone. So U.S. dollar, Australian dollar. What's happened? Oh, my gosh. Amazing. So take a look at what's happened in the last 2 years. So the U.S. dollar, Australian dollar. Remember, we take these exchange rates. I took these from Yahoo Finance because I just created these charts just a couple moments ago. We take that value, which is 1.3, we multiply it by 100. That's it. So that's how we create that value, is what is the U.S. dollar really worth. So it's gone from around 102, you see that all the way, let's say in June or July, to 141 today. And believe it or not, one of the primary reasons for this kind of market is that all of us, you know, if you're a technical analyst, you'd be bearish on that kind of trend. Everyone in the world was bearish. All the hedge funds were bearish. And basically what happened is everyone seemingly got short the U.S. dollar all the way down, and now they're quite possibly facing redemptions, which means what do they have to do? They have to take their position off. So they're long the Australian dollar, short the dollar. What do they have to do? Buy the U.S. dollar, sell the Aussie, and that's what's actually forced this currency crisis. So not only do we have a credit crisis, but we have a currency crisis because the U.S. dollar is surging because most of the active traders all throughout the world were short the U.S. dollar. So let's take a look at, so that's where we start. Just so you realize that we've seen about a 40% move in AUX in the last 30, 40 trading days, which is really unprecedented. In fact, the other day, the Australian dollar had the biggest move it's ever had in its 35-year history, so go figure. Dollar euro, which the symbol there is EUI. The dollar against the euro is almost getting back to where it was in January 07, which is incredible. Most FX experts never thought the dollar would get back to these numbers, or at least not this quickly. So we moved from about 62 to today's close of 73.43 in just a quick month or so. A tremendous move, an absolute tremendous move. And again, why? Because most investors were short the U.S. dollar, long the euro, and they're just running for cover. U.S. dollar, British pound. We see that not as many people actually got short this British pound. How do we know this? Because you were seeing more strength in the U.S. dollar even earlier this year. So the British pound hasn't seen as big a move up because it didn't really move as far down. That's trading. Now the one that's actually gone in a different way is the U.S. dollar against the yen. Why? Because many of those same traders put on the yen carry trade years and years ago, and a lot of them kept that trade on. So what that yen carry trade was is long the U.S. dollar, short yen. So when the market actually starts to melt down like it's been doing, they actually have to take this trade off. Take the trade off, what do? Sell U.S. dollars, buy yen. So you can imagine, we're not trading cross pairs, but if you're looking at the cross pair of let's say the yen against the Aussie, that's just incredible. Everyone's running for cover there. Everyone's trying to sell Aussie, buy yen. That's basically everyone in the world in the last 20, 30 trading days, all trying to do the same thing. And when everybody's trying to do the same thing, I call it sort of like a boat where everyone's on the same side of the boat. All you need is just a little wave, and it sort of turns that boat over, and that's what we've seen. So here's an old chart on the Canadian dollar. I'm going to use today's examples will be on the Canadian dollar. And we saw an extreme sell-off last year in CDD, where it went from around 107-ish down to 91, almost in a straight line. And I had a couple guests on, notably Price Headley, and I urge you to go and listen to Price's presentation about a year ago or so. And you can go and check the archive, where you can listen to it on podcast, where price actually says that it was trading around parity, around 100, and he said, Steve, I think it's going down into the 90s. I said, no, price, it can't go down that low, can it? He said, I think so. And sure enough, went as low as 91 or 90.67, rallied back. And so, it depends on what you think. I wanted to leave this slide up because obviously, to me, it helps you understand trading when you don't look at the current slide or the current chart and you say, well, what would you do to this chart? And I don't know. It's sort of neutral there. Well, what would you do? Well, hopefully, you would have bought the U.S. dollar, Canadian dollar CDD because you see this is different. This is www.livevol.com. This is a great place. I actually urge all of you to bookmark this. It's a great place to get the ISEFX options, the markets each and every day. They actually list the trades each day. They give you the volatilities, not only for ISEFX options, for all products. This is just amazing. So when you go to www.livevol.com, click on quotes and volatilities, and then you'll see the Qs come up. You'll see all the prices there, and then you can pick your favorite trading instrument. So you see these are candlesticks, a couple months old. You'll see that over the last, let's say, 6-7 trading days, the U.S. dollar has rallied from around 103 to about 111. An amazing move. Actually, 110.66. I guess we closed 110.78, so we'll see. Again, today it's October 7th, so for those of you that are going to be listening to this in the future, just remember today's October 7th, but, who knows where we're going to be. And that's the whole idea of trading, is trying to figure out where we're going to be in the future. So you listen to the past presentations. Hopefully you can gather some knowledge from that and utilize it in trading. So the ISEFX options are really, they're based on what you think the U.S. dollar is worth. So it's the U.S. dollar versus another currency. U.S. dollar is the numerator. All the other 6 currencies there are in the denominator. So they're options on exchange rate. They're U.S. dollar based, 50-cent strike prices. The premium is quoted in U.S. dollars with European exercise. They're cash settled, so you don't have to worry about any of the delivery. Noon settlement on option Friday at the noon buying rate, Federal Reserve Bank of New York. They're available in your options, your equity options brokerage account. So, you could take a look. Anywhere you can trade options, you'll be able to trade the ISEFX options. Continuous two-sided quotes. Trading hours are 9:30 to 4:15. Yes, and I didn't mention SFC. SFC, here you go, slide 31. Here are the symbols, and here are the trading conventions. So you would type this into your broker or www.livevol.com, YUC, US dollar, yen, CDD, and so on and so on. BPX, AUX, SFC. So when the dollar is going up, what happens? These numbers are increasing. Dollars are going down, then yes, then the numbers will be decreasing. Question is, can you trade put options? Absolutely. In fact, it's one thing that's great about this product is that we don't have any of these limitations. So the options market is, very liquid. You can do any kind of strategies you like, as long as you're approved by your broker. And it's the most liquid market in the world. So this product is only 18 months old, but it's been gaining more and more popularity. The question was, can you trade put options in this? Yes, both calls and puts are available. So there isn't a holy grail for option strategies, and I think all of you know that if you've listened to me before, that you have to decide which strategy is best for you based on your own risk-reward trade-offs. Understand the Greeks, so you want to understand the terms, risk-reward, the Greeks, and then you want to be able to actively manage your trades. There isn't any one-size-that-fits-all. You, the investor, must have a trading plan and trade within your own goals and risk tolerances.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.